calculation of amount payable to execute. So as we have discussed in the concept of retirement, the amount payable to retiring partner, it is same. We have to do the same thing, but the name is changed here. It is executor. There was a retiring partner. So first of all, there is a statement. We can prepare a statement in which we will write the opening balance, of capital. Then we will add then we will add the share in profit, share in revaluation profit, and then share in goodwill. After that, there will be some less item to be deducted. Share in loss, then share in revaluation loss, share in adjusting goodwill. Adjusting goodwill is written off, so adjusting goodwill. There is one more thing that we have discussed, share in current year profit. Current year profit calculation, do you remember? Maria, do you remember the calculation of current year profit?
Not really.
Not really. In the previous class, we have solved the question also.
Is it
There are two methods.
current year sales times rate of profit?
Yes, that one. So there is two method. One is time method, and the second one is sales method. Do you remember?
Yes, sir.
So that is how we have to calculate the share in current year profit. Okay. Uh, Please write this calculation of amount payable to executor, and then I will prepare the loan account, some journal entry, and after that we will solve a question. Please write this and tell me after you have completed. Sorry.
Certain.
Okay, the second method is by preparing capital account. I think you already know how to prepare capital account of partners, but I'm writing it. This is partners capital account. So the first is by balance BD. Then we will add the current year profit, so profit and loss suspense account. By revaluation account, if there is any revaluation profit, it will be written here. By reserve, and if we have to receive goodwill, so by remaining partners, or you can say gaining partner capital account, because they will give the share of goodwill to the deceased or retiring partner. On the debit side, we will write to adjusting goodwill. If there is any revaluation loss, then to revaluation account. And after that, if there is any uh, profit and loss negative balance, then profit and loss account. So this is our partner's capital account. Please write this also. And there is one more account that we have to write out after this, and then we'll solve the question.
certain.
Okay, now the last concept of this chapter, the executor account or executor loan account, you can say. Both are same thing. Don't be confused about this. Sometime in the book you will find executor, sometime you'll find executor loan account. Now, first of all, whenever we have to pay the money to the deceased partner executor, then we have to transfer the money from his capital account to executor account, and then the payment will be made, because the deceased partner will not take the money, so the executor will take this. So that's why at the end of deceased partner's capital account, when the balance is calculated, it is transferred to executor account. For that purpose, we have to pass a journal entry. I will explain the journal entry also while preparing the loan account. Okay, so this is executor account. Now I'm writing, I have prepared the date LF column also, the proper ledger format I have created. Because in this case, when we prepare executor account, the installment payment is as per the date, not random payment. So that's why to write the beginning and or any other date, we have to create date column. Now, when the partner's capital balance will be transferred here, it will be written here with the date by partner's capital account. Now, every year, let's say, because if the payment is made immediate, like any down payment or any immediate payment is made, then to bank account for any immediate payment. After this, maybe they will ask you that the remaining amount will be paid in two equal annual installment or three equal annual installment. In that case, you have to prepare this account for 2 or 3 years, whatever said in the question. And in these 3 years, we have to pass the journal entry for interest, we have to pass the journal entry for installment payment, and then the remaining balance we will calculate. So every year, at the end of the year, we will write interest. So by interest, interest will be added to the remaining balance, and along with interest, if we include the payment of principal, then it will be called installment. So I will write here to bank account installment. So you can see I have written two bank accounts. Sometimes student ask here, so why we are writing two bank account on one side. So this one is installment payment and this is down payment, or you can say immediate payment at the time of death. After payment of these, you will calculate balance every year. Until the balance is nil, we will calculate the balance every year and it will be transferred to the next year. So to balance CD, it will be here by balance BD. And then again in the next year, I will write by interest. And to cash account, installment payment. To cash or bank, then the total and balance here also. To balance CD. So this is the account note. Account will be prepared for years until the balance is nil or quotient specify some numbers. So if question is asking you to prepare only 2 years of account, 3 years of account, then we will prepare the account for that years only. But if question is saying that the amount will be paid in 3 equal annual installment, 5 equal annual installment, and you have to prepare necessary ledgers, in that case, you have to prepare the account for whole 5 years. Is that clear?
Yes, sir.
So please write this also. Now I will share a question.
Sir, can you scroll down?
Yes.
Sir, can you scroll down?
Done.
Yes, sir.
Okay. I have shared this question before also. Uh, this question number 64. Can you see the question?
Yes, sir.
Yes. So we have solved this question or discussed sometime. I don't remember solving it, but I do remember that we have somehow discussed this question. I think yes. For calculation of share of current year, we have used this. Yes.
Yes, sir.
Okay. So we'll solve this question so that we'll understand. This is a good question. So R, S, and T were partners sharing profit and losses in the ratio 5:3:2, respectively. On 31st March 2016, their balance sheet stood as sundry creditors 40,000, bills payable 15,000, workmen compensation reserve 30,000, capital account of partners are given, goodwill, leasehold, patent, machine, stock, debtors, cash at bank. All these things are given. T died on 1st August 2016. It was agreed that goodwill be valued at 2.5 years purchase of average of last 4 years profit, which were 2012-13 65, 2013-14 60, 80, and then 75. Machinery we valued at 1,40,000. Patent we valued at 40,000. Leasehold we valued at 1,25,000. For the purpose of calculating T uh, share in profit of 2016-17, the profit in 2016-17 should be taken uh, to have accrued on the same scale as in 2015-16. Okay, a sum of 21,000 to be paid immediately to the executor of T, and the balance to be paid in 4 equal half-yearly installment together with interest at the rate 10% per annum. Pass necessary journal entries to record the above transaction and the executor account. Okay, so first of all, there are so many things we have to prepare here. First one is the revaluation account. Then Balance sheet they are asking. Only journal entry and T executor account. Okay. So T executor account, capital account of T and T executor account. And then T executor account. It should be little big. So the first account is revaluation account. And then the second account is T capital account. And the third account is T executor. Okay. Now there are many adjustment we need here. The first one is goodwill to be valued at 2.5 years purchase of last 4 years profit, 65, 60, 80, 75. So first we will calculate average profit. Average profit is given in the question 65, 60, 80, and then 75 divided by 4. It is 2,80,000 divided by 4. That is 70,000. Goodwill is 2.5 years purchase, so goodwill equals to 70,000 into 2.5. It will be 1,75,000. So we have calculated the value of goodwill. After that, machine to be valued at 140. Machine value is 150, so it is decreasing by 10,000. Loss. Then there is Patent we valued patent 30,000, increased by 10,000. So buy patent 10,000. Then leasehold we valued at 125. Leasehold is 1 lakh. It is also increased by 25,000. So buy leasehold 25. For the purpose of calculating T share in the profit of 2016-17, the profit in 2016, okay, so now current year profit we have to calculate on the basis of 2015-16 profit. It is time method. So working note number 2, current year profit. So year, the last year profit is 75,000. 2015-16 profit is 75,000. It is for whole year. So 2016-17 profit up to 1st August, I think. T died on 1st August. Yes. So 1st August. So it will be April, May, June, July, 4 months. So 75,000 into 4 divided by 12. So it is 25,000. And in this 25,000, share of T we have to calculate. It will be 25,000 divided by 10 into 2. So 5,000. This 5,000 will be written in his capital account. So buy profit and loss suspense account 5,000. A sum of 21,000 to be paid immediately. So it will be paid into T executor account. So to cash account. 21,000. And the remaining balance will be paid in 4 equal half yearly installment. Okay, so the whatever the amount we will calculate, it will be divided in 4 parts along with 10% interest on the remaining balance. So we will calculate it later. Now we will complete the revaluation part. So it is 35,000 to partners capital 25,000 R S and T. It will be 12,500. It will be 7,500. It will be 5,000. Now this balance of T will go here by revaluation. 5,000. Then there are some other items also, workmen compensation reserve. So workmen compensation reserve 30,000 into 2 by 10, it will be 6,000. 40. Uh, all other items, yes, goodwill 25,000 again. So two existing goodwill will be written off. It is also 5,000. Leasehold, cash at bank. Yes, there is one valued goodwill which will be given by R and S capital. So R and S capital. Total goodwill value is 175. So 35,000. I'll show you the share in goodwill. 1,75,000 into 2 by 10. So, so 35,000. So this 35,000 I have already written here. Revaluation I have written. Profit share I have written. 21,000 paid immediately. I will write it by balance BD. T 75,000. So 885.91 plus 596.30. 1,26,000. 1,26,000. The balance will go to executor account. 1,21,000. Yes, now after this, the main solution of current topic is going to start. So from here, we are transferring from capital account. So by T capital 121. And this 121, we have paid 21,000 immediately, and the remaining balance will be paid in four equal half yearly installment. Means in 1 year there will be two payments. Yes, and the first payment half yearly, it means starting time is not given here, and the date of payment is also not given. Okay, no issue. uh, so half yearly payment, it means the first payment will be on 31st March. 31st March. The second payment, no, the first payment will be on 30th September every year. The second payment will be on 31st March. Okay, so if year starts from 1st April to 31st March, then the first half year will be complete on 30th September, and the second half year will complete on 31st March. So if we pay on this date, there is only 1 month time, because he died on 1st August. Then 2 month time. Yes, 2 month time here, and then 6 month time after that here. Okay, now the remaining balance is 1 lakh. It means uh, installment four. There is four equal installments. 1 lakh divided by 4, it will be 25,000. So principal amount 25,000 will be included in every installment. Then after that, interest on remaining balance. So interest 1 lakh into 10% into 2 by 12. It will be 1667. So installment amount will be 25,000 plus 1667. So 26,667. Okay, now here we will calculate the interest. First interest will be on 30th September. So September 30 by interest 1667, and then first installment will be also on September 30 to cash. It will be 26,667. The second installment. Now the remaining amount in second installment is only 75,000. So on 75,000, 10% into 6 by 12. It is 3,750. So the installment amount will be 25,000 plus 3,750. 28,750. So every installment, what I'm doing is there is four equal installment in this 1 lakh. So 1 lakh divided by 4, 25,000. So 25,000 principal plus 10% interest on remaining amount. So in first installment, remaining amount was 1 lakh. So I have calculated interest for on 1 lakh for 2 months. In second installment, it is 75,000 remaining, so 75,000. If I go in third installment, it will be 50,000. So 50,000 into 10 by 100 into 6 by 12. So 2,500. And in fourth installment, again 25,000 into 10 by 100 into 6 by 12. So 1,250. This interest of 2,500, 1,250, 3,750 will be added to 25,000 in every installment. So again, March 31st by interest 3,750, March 31st to cash 28,750. When we will calculate the balance, it will be 126 126,417, and then the balance CD, it will be 50,000. So again, by balance CD 50,000, we will charge 2 times interest, one on September 30th, second on March 31st. So by interest, again by interest First time it will be 2500, second time it is 1250. I have written it here, calculated it. 2500, 1250. Now these two interest will be added to installment, the principal amount. For installment purpose, to cash 25,000 plus this, so 27,500, to cash 25,000 plus 1, 26,250. Balance will be nil. uh, 53,750, 53,750. So this is how we have to prepare the loan account, capital account, and if there is any other account like revaluation, journal entry, balance sheet, then we can prepare every account like this. So tell me if you have any doubt.
No, sir.
Okay. Sumaya, Madiha.